It's time for markets now, and Darin Fessler of Lakefront Futures and Options is our guest this week. He's been following the economic impacts of the beef industry from the beginning, so we're going to get his thoughts on that, plus a whole lot more. First, though, I wanted to hear how this pandemic has changed his day-to-day role as an ag advisor. We spoke on Wednesday.
What has taken place over, let's say, the last 6 weeks has been really detrimental, really, to the overall outlook and probably the optimism for producers going forward here. And if you look at, on a day-to-day basis, what has transpired here, I mean, we were, definitely utilizing last summer's rally for the benefit of producers this year. We were hedging some stuff last summer, even for a DC 20 this year. So I'm glad we did that. But obviously, when we start looking at, what would be the, maybe the acres picture for this year and what could be the carryout picture for this year, even back in January and February, and even the early starts of March, before we really got hit with this coronavirus headlines and even the ethanol side of things, which is a whole nother topic. We were pretty aggressively buying puts, selling calls, just to get a little bit more protection on the book. Not that we knew what would happen with the ethanol destruction. It just happened to be that, we got a lot of acres planted, or the assumption that we're going to get a lot of acres planted. And then we got hit with the virus that really hit the crude oil market, and it essentially hit the ethanol demand and really hit that hard. So, I mean, call it right place at the right time, but really, again, it was managing that risk for the producer.
And another big story, meat industry, cattle markets, especially with COVID-19 over the last few weeks. I wanted to get your take on that. Slaughter, it's way down. Boxed beef, it's way up. So you would think these two markets would kind of behave in a similar way, but it's almost like they're two different commodities. Kind of break down the economics on that for us.
Yeah, it's a really big disconnect if you look at what's going on in the boxed beef numbers, which have been pretty parabolic, over late. And then what's going on in the futures market. And so if you look at, it's a fine balance here between the packing industry right now and to be able to get the workers safely and healthy back to work, to get the capacity up to much higher levels than what it's currently at. Now, I've been somewhat vocal on the packer issue lately, but it's one of these things is, you look at the retail side of things and people are, well, boy, look at Hy-Vee's and look at some of these other retailers that they're limiting the amount of meat that we can purchase. And it's not the farmers making a lot of money here. It's the ability to get the workers safely back to the packing plants and get the capacity back online. And until that really happens, it's the economics of it. It's supply and demand. It's not that we don't have the meat. We just don't have the supply of meat that we used to, hitting the retail shelves. Mm-hmm. And so it is the fine balance of what does the packers really do at the end of the day to maintain a healthy and safe work environment for their employees. Again, balancing that with, we have hogs that you really can't back that market up too much. And you have cattle that's ready for slaughter. That's really the big detriment of agriculture right now is how do we get these creatures and that are ready for harvest, how do we get them to the plants? And, sadly, there's been some stuff that's happened in our industry that I think as far as people in the ag industry, we need to get ahead of that curve and explain to the public why we're doing what we're doing and what some of these producers have to do to really, at the end of the day, to shore up their livestock.
Yeah, so all that being said, say there's a producer who's just finished calving not too long ago, or someone who's managing a feedlot. What are some things that they can be doing right now?
Well, it's a difficult situation. Is obviously with the contacts they have with their packing plants and the people who buy their livestock. Keeping in close contact with them is obviously a very, very good situation. I'm always a big believer in communication is first and foremost probably the most productive thing in business. But when you have, say, for example, hogs that are ready for slaughter and there's no place to go, there's got to be a lot of tough situations to be made. And sadly, it's what you have to do as an industry.
All right, let's move on to planting now. And been seeing lots of farmers in Nebraska posting pictures about being done with planting. Some are getting close. Kind of give us a breakdown on some things that you've been seeing on that end.
Yeah, the planting progress has been really, really good across the Western Corn Belt. We know that. I think that if you look at the Western Corn Belt, especially in the northern plains, you really got to focus on what's going on in North Dakota, because there is going to be quite a bit of PP. I don't think the market's really maybe calculated in yet. Now, granted, I have a lot of producers up there are going to say they've been thinking about PP for a while now, and really, they're probably going to be more financially better off if they just take that PP. Conditions are very, very wet, but not all of North Dakota's in that same boat. We're talking, if you around the Jamestown area, the Fargo area, the Carrington areas of North Dakota, which is a good production areas of that state, those are the ones that are having the issues. And if you go further west, not so much issues. Granted, there's going to be a little bit of slowness with the rains across Illinois, Indiana, Ohio, but I'm still not too concerned. I know there's been some talk about the freeze maybe over the weekend stuff that maybe would nip some of this corn that's been emerged, but we'll see how that all pans out. But right now, I'm not too concerned with how the planting progress is going. It looks pretty good.
And for those who are finished or about to be finished with planting in this current ag climate, what are some things that we need to be focusing on as we head through the growing season?
Yeah, I think that having targets in place and having some type of structure in your marketing plan, whether that's grains or cattle, just have some type of targets in place, especially when you get some of these maybe seasonal bounces. Let's knock on wood, we get some, but you got to look at, okay, the acres and what potential yield could be and the overall production. I mean, prices could get much uglier from here. Hopefully they don't. I don't want to be a bear that's constantly just hammering the market, but it's somewhat the reality we're in. And so just having targets in place, managing that risk, and really thinking it from a business standpoint, if corn goes to 420 or 450 or whatever that price may be, that's not the problem. What if we go much lower than these levels where it doesn't work from a break-even standpoint?